Hello, everybody, and welcome back to this exciting closing session of the 47th Inclusive Annual Conference. We have a very special guest joining us for this last session, Senator Mark Warner. I'm going to first introduce and welcome my credit union colleagues on the stage who will join me in hearing a little bit more about what it took to get this historic investment into CDFIs and minority depository financial institutions this year, how we can use the investment, that $12 billion, to build our communities, and how important it is for community development credit unions to stay engaged and to keep raising up our voices and our stories to lawmakers. I first would like to introduce Bill Bynum, the CEO of Hope Credit Union. Then I'd like to introduce Urla Gomes, the CEO of Episcopal Community Federal Credit Union. And finally, Paul Phillips, the CEO of Freedom First Federal Credit Union. And now I'd like to turn it over to Paul to introduce the senator and to share who will share some opening remarks with us.
Great.
Paul.
Thank you, Kathy. Senator Warner was elected to the U.S. Senate in November 2008 and re-elected to a third term in 2020. He serves on the Senate Finance, Banking, Budget, and Rules Committees, as well as a Select Committee on Intelligence, where he is the chairman. During his time in the Senate, Senator Warner has established himself as a bipartisan leader who has worked with Republicans and Democrats alike to cut red tape, increase government performance and accountability, and promote private sector innovation and job creation. Senator Warner has been a champion fighting to get resources out to businesses and families most affected by the pandemic. And he has been a real champion of CDFIs, MDIs, and credit unions. He was the architect in the Senate of the Jobs and Neighborhood Investment Act, which became a critical part of the Consolidated Appropriations Act of 2021 that included a $12 billion investment in CDFIs and MDIs, the largest investment in the industry that we have ever seen. Senator Warner, you should know that Freedom First, along with my credit union colleagues on the stage today, and so many in the audience, have not only applied for these funds through the Emergency Capital Investment Fund and the Rapid Response Program at CDFI, but we are already moving forward to grow our lending and services and dramatically increase the amount and type of capital that we can invest in communities that need us most. Senator, we're so glad you're here, and welcome.
Well, Paul, thank you, and thank you for the great work that your credit union does in Roanoke, Blacksburg, and the Roanoke Valley and New River Valley. Cathie, it's always great to be part of any kind of inclusive event. I know this is, I understand, your 47th annual event. That's a long history. I congratulate you. I'm looking forward to this panel. I know my friend, Chair Maxine Waters, I think made an appearance or is going to make an appearance as well. I know this audience, and I want to give a little bit of background about how this became such an important interest to me. I am the first person in my family to have graduated from college, went on to law school, decided I'd become an entrepreneur, took my life savings, invested in a little startup business, helped that business go broke in 6 weeks. I then went into another field in real estate and failed in 6 months. Had no access to capital, was living out of my car, but I got a third opportunity. And I was lucky enough to hit into the early days of the cellular telephone industry back in 1982. I was very fortunate. I started a company called Nextel. I became a venture capitalist. But I think I'm honest enough to realize that if I had not been a white man with an appropriate education, I might not have gotten that third shot, that second shot, or that first shot. And prior to being the Senate, or prior to even being governor, I tried to make sure that this issue of access to capital in terms of entrepreneurs of color was very important to me. And I personally banked at one of my banks was an MDI in Richmond. But we saw so many of the minority depository institutions, frankly, go out of business post the financial crisis in 2008. I also am familiar for many years. There's been no group in the financial industry that has been kind of more had my back over the years than credit unions, long before it was popular to the any kind of supportive of me. So I have an affinity both for credit unions. I have an affinity for MDIs, and I very much, I hope I appreciate how unlevel the playing field in so many ways are in terms of access to the capital for people in rural communities, people of color, and all of this was exacerbated, manyfold by COVID. COVID, along with the murder of George Floyd, exposed in many ways the systemic racism that so many CDFIs deal with on a regular basis. And as we were coming out of COVID and doing all of these, targeted relief plans, we repeatedly saw, and I think not by malice, but again, somewhat due to some of the institutional challenges, that minority businesses were just not getting the same high level of participation in PPP and some of these other initiatives. So as the year went on, it seems like it was a long time ago, but it's just last year, working with then Senator Harris and Senator Booker and Chuck Schumer, we put together this idea of we ought to step up in a major way and invest in CDFIs and MDIs, not just in terms of the existing CDFI fund, which well-purposed, well-suited, but was relatively small dollars, but we really need to provide technical assistance, immediate dollars, but also tier one capital. And that was the birth of this initiative. Happy to say that it ended up getting included in the final piece of legislation around COVID, actually under Donald Trump. And one of I want to give credit where credit was due. The then Treasury Secretary, Steve Mnuchin, was a big advocate for CDFIs and MDIs. Mike Crapo, the then chairman of the banking committee, Republican senator from Idaho, and a number of other Republican senators joined with the Democrats. And we got $12 billion in what was a brand new initiative at that point. I've been very pleased with the fact that the first round of grants have pretty much gone out. I know on ESIP, the applications ended on September 1st, but I've been very, very pleased by the number of applications and the take-up rate. We've still got that second $1.75 billion coming down the path in a subsequent round of grants. We're going to get this ESIP money out. We also, just two quick other comments so we can get to the panel. My good friend Ben Cardin is trying to also leverage some other federal funds. So I think there could be, more to come. And I know as well, there are other activities we discuss as the panel gets started that we can discuss on how we could potentially even leverage additional private capital. My hope is, and I know that many of you dealing with the federal government or dealing with elected officials on an advocacy position for your CDFI alone may be a bit of a new experience, and maybe we can talk about ways to make sure that is done efficiently. But I say thanks to everybody that's in the Inclusiv network. I really appreciate all the great work you're doing, and I hope we can get you that extra capital and that extra support so that you can go forth and even prosper more. And at the end of the day, obviously help an awful lot of Americans get the same kind of fair shot that I got.
Thank you, Senator. I mean, that, both your personal story as well as the story of how you put this sort of coalition together to get this through is so fascinating. And I think it's really important that what you were able to do in the moment of this crisis was kind of thread that needle of, there was both rapid response money going out, but there was also a recognition of the value of long-term and patient capital. And one of the things that we had seen, we had done quite a bit of analysis around, the last financial crisis, and really saw that not only did the last financial crisis hit the communities our members were serving so hard, and much harder than the rest of the economy, it just takes so much longer for our institutions to come out of it, and so much longer for their borrowers to come out of an economic shock. So that combination of immediate need and response with that long-term patient capital is really, really critical. I'm gonna turn it over to Bill, and Bill Bynum, you have at Hope, you all were immediately, on the lines with us and on the phone and and reaching out to so many folks on Capitol Hill, kind of trying to sort of make it clear how important it was that that the public sector and the federal government respond to what you saw in your communities. I wonder if you could tell us a little bit about kind of what was going on as you got started in really pushing for this, and what are some of the most important points that you were making as you were engaging both your legislators and Senator Warner and others?
Well, Cathie, I can't say enough how important it was to have the support from Senator Warner and his team. I remember a Saturday night early on when I was on the phone, well, I think it was Craig from your office and your team, and others, and Senator Booker was on the phone, but it was clear that this window was open. But I appreciate your acknowledgement of the support from the Treasury Secretary, but quite honestly, without your advocacy and making clear how vital it was to get capital to CDFIs, it would not have happened. So, Senator, I really appreciate your leadership on this, particularly with regard to recognizing the vital role of minority depository institutions. CDFIs writ large are critical financial first responders in communities that have been neglected for a long time, whether that's in the region I serve, which is I'm in Mississippi, Alabama, Louisiana, Tennessee, Arkansas, the blackest and poorest part of the country. And as you said, banks closed in record numbers. And when there is not a bank in a community or a credit union in a community, you're relying on predators, financial, loan sharks, and who charge those who are least able to pay the most. And so your investment in these institutions, particularly Black institutions, is critical. I often refer to credit unions as sort of the invisible, sort of forgotten MDI sometimes. There are 252 Black credit unions compared to 17 Black-owned banks. Mm-hmm. There's 750,000 owners of these institutions, and federal investment, particularly in the South, makes a critical difference in our region. When in Mississippi, you're more likely to get turned down for a mortgage if you are a $150,000 net worth Black household than if you're a $30,000 net worth white household. That speaks to systemic discrimination in the system. In Arkansas, a state with 16% Black population, SBA loans only 1.2%. That's the program that is designed to close those opportunity gaps. So and that goes through traditional banks. And so it's vital that these credit unions, particularly credit unions owned by people of color, are equipped to step in and fill the gaps that we saw happen once PPP was opened up. We talked about 12 billion in ESIP and the CDFI funds. There was 15 billion dedicated to CDFIs after it was clear that the banks were not adequately filling those needs. And so this is transformational level of investment that's critical. I really think it's vital to underscore that not only does this open up access to critical financial tools to close the 10-to-1 wealth gap between Black and white folks, 100-to-1 for Black families with children compared to Black families with children. You don't get education, healthcare, housing, basic opportunity ladders without access to capital. And that's not coming from anywhere else the way it's coming from the credit unions that are part of Inclusiv, and particularly in communities of color. It's also significant, I'm sure you'll appreciate the fact that one of my favorite analyses that our policy team does is when we survey our members, we found out that 90% voted in the last two national elections. So when you have a stake in the game, when you are an owner, then you step in, you let your elected officials know what your priorities are. And that's how we change the systems that have really neglected so many in this country. So I want to thank you. I could go on and on, but I do want to also emphasize how important it is to distinguish the great CDFIs from other CDFIs. We did an analysis showed that 11 in Mississippi, we got more CDFIs than any place else in the country. When you look at the HMDA data, 13% of their mortgages went to Black residents in a state that has 40% Black population, 13%. And so the accountability, Hope's mortgages, 80% of our mortgages go to Black folks, 60%, we're owned by women and people of color. So we're accountable to those communities like other credit unions. And so I really think distinguishing the great performers from the good, from the not great performers, and making sure that there's accountability. There's a different reality in Massachusetts than there is in Mississippi. And so we really look to the federal government, and I appreciate the clarity that you gave to the Treasury Department in prioritizing minority depositories. I think additionally emphasizing investments in those credit unions and CDFIs with a track record of doing right with the money once we have it.
Thank you, Bill.
Thank you.
Thanks, Phil. And that, that research, which is just fascinating about civic engagement, I also think it's important to note that, we as credit unions, we are financial cooperatives and democratic institutions in and of ourselves. And in a lot of ways, I think part of that member engagement and member participation in the institution is yet another way in which I think we're building and deepening relationships in communities. Urla, you serve and represent and lead a small CDFI, a small minority depository institution, a minority designated credit union, and a small CDFI, and you have really gone for it. You went, you applied through CDFI, you went through the Emergency Capital Investment Program. I wonder if you could tell the Senator a little bit about that process coming from a small institution, and tell him and us a little bit about your community and why you knew you needed to go through these steps to do what you need to do and get that capital to your community.
Hello, Senator.
Hello, ma'am.
We are, I know you mentioned Maxine Waters, but we are in her district. So we call her Auntie Maxine. And when all of this started, she was there calling up all of the small institutions in her district and asking us how we were doing. So I think that you guys are doing a fabulous job in terms of that. My board also feels that you are a very reasonable person. But to give you an idea of our credit union is located, as I say, in Los Angeles, in Echo Park area of Los Angeles. We are a very small institution. We are about $7 million in assets. We could have been much larger, but because of the restrictions of capital, that's why it has restricted us. Most of our membership are minorities. We are 70% Hispanics and African Americans. We are a CDFI, faith-based MDI credit union, and our board shows that also. During the pandemic, we started 2 new services. We have immigration services and ITIN lending because we realized that that was needed in our community. Within our community also, even though we're small, a lot of small institutions don't give debit cards, credit cards, checking accounts, and we do all of that, startup loans, and we do all of that. So we have been a CDFI for many years, and in the beginning, we never really used the CDFI the way we should because of the way you had to apply for CDFI loans. To us, it was very cumbersome. And then finally, Inclusiv came into play, and they helped us with the process on how we can apply for the CDFI loans. CDFI really has helped us because if it was not for CDFI, we will not be in business today. And those members that we help would not have an institution that would help them because we're truly a low-income institution. We have people in our credit unions that live under the bridge in Los Angeles. We tried to get them from under the bridge, but they wouldn't come from under the bridge. So we help the homeless. We help the people that are the immigrants that have no papers. We help them to get their ITINs and to get them started on a road to financial improvement in their lives, family and individuals. CDFI in the beginning, as I said, the process was very, we couldn't get through the process because of all of the work that we had to do. And we finally got there, and then it helped us build our capital. Then here comes the Federal Reserve with the investments. Our investments were doing well. We were making money on our investments, and then suddenly the interest rates dropped. So our income declined by 60%, and that was very difficult. But then CDFI kicked in, and we were able to apply for a CDFI loan that helped us to bring our capital back up to where it should be. Now we are in RRP, we were able to also apply for that. I thought that was great because the constraints that we had with CDFI, we did not have with RRP. So RRP is now allowing us to increase our capital, help us with our delinquencies, which we really don't have a lot, which was a blessing in disguise, and to start new services with the credit union. Our credit union with RRP is now going viral because our mission is to get as many low-income people into our credit union as possible. So that's what we're doing with the RRP right now. And we also applied for ECIP, but as you said, Senator, we don't know as yet if we were going to get it. We had TARP funds during President Obama's time, and we paid that back. And it was great because we were able to build our capital during the time we had TARP funds because we had better interest rates and then we had more loans coming in. So now we are going to go virtual, and we're hoping that with RRP and ECIP that our institution will grow to about $20 million in 3 years. Thank you very much for your work. We appreciate you.
Thank you, ma'am. Congratulations.
Thank you.
Senator Warner, I wonder, before I go to Paul, our next speaker, if there's anything that resonates with you or any questions you have for either of our two speakers.
Well, I think it's interesting to see the breadth of mix from the heart of Los Angeles to across to the Mississippi and the Arkansas of Tennessees of the world. I would want to pick up on one of the things that Bill said, and that is this wealth gap, racial wealth gap, 10 to 1 Black family to white family, roughly 6.5 to 7 to 1 Latino family to white family. A lot of it is, I know, is due to the inability for families of color to get real estate, and I think that's a pretty stunning statistic about you got 150,000 asset family versus a 30,000 asset family, and who's getting more loans. And part of that though does go to the ability to own a house and build equity in the house. One of the things I'm trying to get into the reconciliation package, the real time, is something that we're calling the lift up initiative, and we are hoping that what the kind of bottom line is, and we've taken Chair Waters' definition of first generation, first time home buyers, which by, again, just the nature of what America looks like today, that is about 2/3 people of color. And we're saying, along with a potentially new down payment assistance program, if you could qualify within a certain income band for that first home, again, within a certain income band, and qualify on a traditional 30-year mortgage, we will do an interest subsidy that will create a 20-year product, even though you're only making payments on a 30-year mortgage. So you can make that $900 a month payment for a $220,000 house, which might be easier in Mississippi than in Los Angeles. We're going to allow you to accrue equity or acquire equity at the 2-to-1 rate. It really is a phenomenal effort, the power of compounding, that if, as you guys know better than I, if you can go ahead and do that interest rate subsidy, you don't then end up driving up the house price. You still have to be able to meet the your mortgage payments. But in terms of deriving that equity that you can then lend against, if you want to send your kid to college or you want to go against, if you want to start a business, I think it's one more tool in the toolkit. And I also want to just add, we know that the FDIC has recently put up their new fund, $120 million mission fund. I think I've still got some questions about that, but it's, I'm anxious to see more activity in this area. And my hope is that I can work with other regulators, both on the credit union side and on the deposit or more traditional bank depository side, to see how we can get more capital into these communities. Because again, access to capital is so many ways the access to success in this country. And I really appreciate both the stories of what Hope and the Episcopal have done in their respective communities.
Yeah, and there's the representative.
Paul does a pretty good job too in
yes,
Roanoke Valley and New River Valley.
Yeah, so now maybe we should.
Cathie, can I just make one quick point? And so that's really exciting. You talked about home ownership, closing the gap. Business ownership does that too. The gap is 3-to-1 for Black business owners compared to white business owners. If you're an owner, it doesn't get you even, but it is a game changer. But I really can't say enough about what you said about attracting private capital and other capital. The federal government is a pump primer. You go in where markets have failed and try to make them work. And we've seen the tip of the iceberg of the potential of the private sector to step up. Since George Floyd was murdered, there has been more attention to the importance of closing the gaps by the private sector than I've seen in 40 years of doing this work. And I think that what you're talking about with Congress, with Treasury and with the White House about incentives to really unlock that capital from private corporations. Banks are okay, but banks do go where they get a CRA, get to check the CRA box. But every company has employers in communities, and in a country that's becoming increasingly diverse. If they don't have a productive workforce, if people can't buy their stuff, then we're no one's winning. And so I think this is a moment where the incentives you're talking about for the private sector could really dwarf the 20 billion, the 30 billion that you've already invested in CDFIs. I think that's where we could get this country where it needs to be.
And Bill, let me just echo. I know I want to get to Paul, but it just because part of my concern is these companies have made these announcements. There's no ability then to monitor, are they actually doing what they're saying they're going to do? 2, is there any way that if they are doing what they're saying, we can give them an attaboy or attagirl, give them a little attention and credibility? And 3, I think there's an ability to even get more private capital if you can lay out how to use that private capital. I mean, even when you want to do the right thing, if there's not a trusted vehicle to deliver that, and so many of these companies don't have obviously they don't have the connection into the community the way that CDFIs and particularly CDFIs that are MDIs as well. So I'm very excited about this. We hope to bring together some top tier leaders, national leaders on this issue. And I'm working very closely, for example, with the Deputy Secretary Wally Adiamo at of Treasury, and I hope to be able to come back to Inclusiv and others literally within the next 2 to 3 months with a report of what will be next. I want to do the lift up program in reconciliation. I want to make sure we get all the money out appropriately on the initial program on CDFIs, but I do want to take this private capital step next.
That's fantastic, and I. To underscore Bill's point earlier and a point that you made, Senator, recognizing that it's not just the sort of the banks, or the FDIC insured banks, but the breadth of, of all the CDFIs, but particularly, the extent to which credit unions, you heard, starting off with the smallest of small dollar loans to get people just righted, getting their footing, getting, past credit challenges addressed, getting them back on pathways to, greater financial independence and freedom. And then being able to kind of move up from there is so critical. So many of the homeowners that, we work with started at the credit union with just getting small dollar loans to get out of traps that they've been in. And with that, I'd like to turn it over to Paul Phillips, and have you maybe tell a little bit, Paul, about your perspective from Western Virginia, and maybe share a little bit about jump into this conversation.
Oh, okay. Thank you, and welcome, Senator Warner. And Bill and Urla, it's great to be on the call with you. And Bill, you just don't know how much hope has inspired our credit union in the work that you do. And we'll have to have an offline conversation about how to serve rural areas, because as luck would have it, after we applied for ESIP, we were approved for a rural district charter in Virginia that includes about 20 counties. It's about 10,500 square miles and has less than 100 people per square mile living in it. And about a little less than 60% of that geographic area is deemed low to moderate income. So the ESIP funds, we had hoped these would merge at the same time. And as luck would have it, they did. So that additional capital is going to provide really jet fuel for us to get out into these underserved markets faster with the community development products that we have developed since 2010 when we became a CDFI. And those products cover the usual kind of gamut of, some portfolio, affordable housing products, high LTV, no MI kind of things, transportation loans, workforce development, payday alternative loans. We also provide the financial empowerment centers for the Roanoke region. And that's something that we hope to extend to these broader markets as well. So, we're literally right now in our strategic planning process, and our plan, we've written the ESIP funds into the plan. So if you could make sure that happens, we would greatly appreciate it. Because I don't want to redo all that paperwork and run those numbers again. But in going back in time to 2010, we also received, like Urla, CDCI money. And you remember what it was like back then. The sky was falling. There was a contraction, of capital. People were really hurting. Banks were, and credit unions were concerned about the future. That additional capital then allowed us to be confident, to have a capital level that we could continue to serve markets and folks that really needed our help when so many others were pulling back at a time of really high need. And it feels kind of the same now. This ESIP money is going to create a pretty significant capital buffer for us, which allows us to reevaluate our risk tolerance when it comes to credit products and expansion into other markets, really allowing kind of your net income to still be at an acceptable level and building capital, but maybe not as high as it normally would have to be because you have that capital cushion. And that really keeps our regulator happy, and it also emboldens us to really dig deeper in reaching out to serve people and develop products in ways that, we wouldn't have otherwise. So it's a tremendous lift for us, and, we are deeply grateful to you. And we also were fortunate to receive rapid response money. And, some of the things that we're doing with that is to go through our community, particularly the nonprofit sector, and identify those nonprofits that really stepped up during COVID. For example, Boys and Girls Club, teamed up with the YMCA, and when daycares were closed and parents couldn't go to work, they were busing those kids in, and they went from an after-school program to all-day program with, meals and the whole boat. And so that rapid response money that we're distributing to them through grants, is just a real vote of confidence that, again, emboldens, people in the community, credit unions, nonprofits, and others to really do the work at a time when it's scary, but the need is great. So just can't thank you enough for your efforts. And we promise, I think you, when you visited Roanoke several months ago, you said something along the lines of, this is your moment, CDFIs, don't blow it, kind of get the money out because everybody's watching. And I promise we will do our part and we will get into those areas where they really need us.
Well, that's great, Paul. And, I really commend, more familiar with Paul's work as the senator and former governor from Virginia, but I really appreciate what you're doing. And I think that the community across the nation, the take-up rate on ESIP grants, I know even in Virginia, we remember that conversation, Paul, there were certain people that were like a little leery. Is there going to be too many strings attached? Is this going to be flexible enough? I think I think we're meeting that criteria. I think I mentioned earlier, my friend Ben Cardin, who's the chairman of the Small Business Committee, he and I are talking about additional future funding, federal funding flows that could assist CDFIs writ large, and particularly some of the credit unions. There are some potential funds, depending on how this whole reconciliation process, the kind of second part of the president's Build Back Better agenda. If we can get it through, I think there may be some more relief there. And then one other item I want to mention, and this, Bill and Paul, or it could be potentially some of the use of private capital that may be able to come in without a lot of restrictions into loan loss reserve funds. How, again, we can might not come in as tier one capital, but might come in again on some of those the loan loss reserves.
Mm-hmm.
So I think there is a moment now. I think people are COVID exposed a lot of what's good in our country, but also a lot of what's bad. And when we think about last year, we lost 440,000 Black businesses. That when we lost, some people have estimated 25 to 30% of all the Latino businesses. That's a generation of wealth creation that we have to get back. The flip side is that, the new business startup, to Bill's point, beyond just kind of housing, the new business startup numbers are really remarkable as people, I think, post-COVID start to rethink their lives. Maybe they're not going to go back to the employment they had beforehand, and how we can find ways to get those entrepreneurs some of the capital, recognizing, just as I did, that you're going to have some failures along the way, but we got to take those chances. I echo. I don't want to rehash again exactly what Bill said, but this is not, in my mind, simply the right thing to do. This is the economic necessity of our country. California is already 50% people of color. I mean, if we don't have full participation from every American, regardless of their heritage or race or background, we're not going to be able to prosper. I mean, we are not. Our population is not growing the way it did in previous generations. The unfortunate cutoff of immigration into the country, all that just really makes it absolutely essential that we leave no one behind. And there are too many swaths of communities, people of color, but also rural white communities as well that need this kind of assistance. And frankly, it's not, that's what I was so focused on. Let's get the emergency short term, but let's actually see, and that's what we're trying to do with ESIP, to build the capacity of the sector and the longer term capacity. And because I think it is, CDFIs are still a kind of a secret. I know when I was trying to deal with this with my colleagues, there were a number of the other senators that didn't know what CDFIs were, or they had one or two in their state, and depending on the relationship with that one or two in their state was their whole view of a sector of the financial sector. So to the whole group, to the whole conference, I will make the same comment I made to Paul when I was down visiting with him and other entities in Southwest Virginia. This is your moment. Let's find a way to maximize that, because Lord knows you do a lot of good.
This is our moment, and I think if there's anything we can do, I think it's a great call to action for the entire conference, that we really should be raising up the work that we're doing on the ground and making sure that legislators are seeing and are aware of the great work that everybody's doing. Senator, I know you have a,
I've
you
got a
have
heart
some-
out in a moment, but let me just again
Great.
thank Inclusiv. I want to thank the credit union organization as well. They do a great job. My credit unions in Virginia, putting on a political hat for a moment, were the very first people to back me way back when, again, not only did I fail in business, I failed the first time I ran for elective office in 1996, but credit unions were brave enough to support me then. And I've always tried to have your back. But I think it is credit unions writ large and CDFIs as a separate set. I would urge you make sure that you get more in front of your legislators. This is a story that needs to be told. And if there are ways, particularly as we move past COVID, that I can help in terms of convening senators and others in smaller settings where you kind of get to tell these firsthand stories. I think it's one of the things I learned was, how the Mississippi's and Alabama's originally ended up with so many more credit unions in many states. I mean, this is still a secret that I think we're going to have some secret sauce here that we can do a lot to help our country. So I very much appreciate the opportunity.
We are so grateful for your time with us this afternoon and for all the work that you're doing on our behalf. We will take advantage of this moment. We will get that money out. We will make our community stronger, and we won't let you down.
Thanks, Cathie. Thank you all. Be well.
Thank you very much.
I wonder if any of our panelists have any parting remarks or any parting thoughts.
I appreciate the charge. This is our moment. I think wherever you are, I've been doing this for a few minutes and I've never seen a window open like this. I think as much as we can emphasize the importance to our to the administration of focusing the resources on credit unions and CDFIs with a track record of doing the work, because I've seen it after Hurricane Katrina. I saw it after the financial crisis. When there's this much money out there, everybody's going to be competing for it. Our members demand, we owe it to them to make sure we hold Senator Warner and the White House accountable for getting these monies to where they're intended to be.
Thank you.
Yeah, I would just mention that in NCUA, if you're on the call, please cover your ears when I say this, but credit unions have adequate capital, most of them. In fact, many of them have more capital than they probably need or should have. And now they're going to get this large capital infusion and create this big buffer. Really dig into what risk truly exists on your balance sheet and really consider how much more you can do, how much deeper you can go in your lending programs, reaching into these communities, forging relationships, creating programs to help people. It doesn't do anyone good if you get a lot of capital but keep doing the same thing. Yeah. Really dig deep, understand your risk, and spend that money in productive ways. You have enough capital, most of you. I mean, be smart about it, of course, but be brave too.
Well, that's the reason why with our RRP, we are starting the virtual services, because we feel that we will have many more of our low-income people join us, because everybody has a cell phone, everyone. Yeah, and thanks, Cathie, and thanks, Inclusiv, for the wonderful work that you guys do for us. We appreciate that. And
Here, I would echo, earlier you just talked about investing in your technology. I mean, Paul, I hear you that we have adequate capital according to NCUA, but adequate capital to do the work is a different thing. We couldn't make the kind of investments in ramping up our infrastructure and expanding to other markets that need credit unions that don't have them. And so there's NCUA adequate, but there's adequate to do the work. And so I just want to make that distinction.
Yeah, 100% agree. And you got to try and get to scale, so you can help more people and do it responsibly. Absolutely.
Cathie, keep kicking those doors. You and Pablo and the team do amazing work.
Will.
Thank you.
You do.
We will. Thank
Yeah.
you to the panelists. And with that, keep kicking on those doors. I want to thank you all for joining us for this session. And I want to invite onto the stage Alane Dent, who is a consultant for corporate and legislative affairs at CUNA Mutual Group. And it's a perfect segue to Alane because we have been kicking in some doors. We have been working throughout 2020 and 2021 really to try to raise up the need for capital going to credit unions, going to CDFI and MDI credit unions in particular. And we've had a fabulous partnership with CUNA Mutual Group, with CUNA, with the entire credit union system, all the state leagues. And a lot of the ability for us to kind of keep kicking in those doors was through partnerships with folks like you, Alane. You were meeting with us regularly. You were giving us ideas on strategy. You've been a long time sort of point person in the Washington, scene, and really know a lot about what resonates. And you spent a lot of time on Capitol Hill. Tell us a little bit about, how well do you think legislators understand what we do, and what can we do to help them understand us even better?
Thank you, Cathie. And, I love how Senator Warner said this is our moment. And it is so true. 2020 was the perfect storm. You had George Floyd, movement on racial and social equity, the impact of COVID, unemployment, small business closures, and fortunately, bipartisanship, a willingness to work together, understanding that we need to right-size the economy. And so I would say, we have tremendous leaders with Chairwoman Waters and clearly Senator Warner, that bipartisanship that he spoke of, Chairman Crapo of Senate Finance. You have Senator Cardin leading the Small Business Committee. So, on the committees of jurisdiction, I would say you have deep understanding. There were a number of hearings before Financial Services and the Small Business Committee where the CDFI credit unions were able to speak up and talk about the communities they served and the need that they were trying to address. And I really think that went a long way to help fund a lot of that stimulus spending. And so, to Senator Warner's point, off those committees of jurisdiction, there may be a general understanding, but there's definitely work to be done. And I like the stories that were told here. We have to share. It's impactful, and it's only up to us to tell it. And when we tell it, we get a lot of head nodding and support. And not only that, we have the numbers to prove it, especially in 2021 with the money coming in and going out the door, providing access to capital. So, I would just say, continue to educate about the intersection of community development, credit unions. The word is getting out, that stories are impactful, and it's making a difference.
Sorry about that. I muted myself. I should have stayed on. I wonder if you could tell us a little bit about, some of the, some of the conversations that you and I had and our teams kind of had as we were sort of trying to figure out kind of how we tell our story. What do you find is the most, as more legislators are kind of recognizing the role that credit unions play, kind of how do you think we can best tell that story? Some of the things that Bill was touching on and Paul and Urla were touching on around, there's both the story of like what it means in our communities, but also some of that differentiator about, the banking system and, where the banks are and then where the credit unions are. And the fact that capital helps us go even deeper than we already are. How well, can we tell that story about that, getting that capital out where others are not?
Going back to the key thing, this is our moment. These are some of the issues that Congress is hyper focused on right now. Baking deserts. Who are serving these communities? Why are banks leaving? Who is coming in to serve those communities? You look at financial inclusion and the wealth gap. I know it was brought up on the previous panel. Access to capital, how to keep our small businesses open. So these are all very topical, and it provides us the greatest opportunity, the best open door, because people are ready to listen. They are trying to find solutions to these problems. And, you know, even beyond that, you talked about diversity and inclusion. Is not just a wealth gap, but how are we filling these jobs? Is it just, you know, how do we get the executives, the higher levels? It's not just bringing somebody in at the lower administrative level. And so we have so many great stories to tell on all those issues that are topical. You know, if we don't tell our stories, no one else will. People are willing to listen. And most importantly, it is not a partisan issue. I don't care what state you're in, red state, blue state, urban or rural, everyone's been impacted. And so everyone is listening. This is the time. You'll be surprised, and Cathie, you and Pablo and Jules know this, the importance of reaching out to Republicans and across the aisle. I think some of our greatest champions, although they may not be vocal supporters, they are more than willing to go and talk to committee chairs or leadership. And that's what we saw last year as we were advocating for PPP and additional funding for CDFIs. You know, those members who had heard from their local CDFIs, this was the easiest conversation to have. They knew the impact. And so, you know, were they signing on to letters? No. But were they willing to call and indicate their support and not stand in the way? I'll take that any day. You know, so let's continue to do that. Let's not write anyone off thinking that, oh, well, they don't care. You know, they're only supportive of certain people in the community. We need to touch everybody. And just yesterday, talking to Pablo, you are in every state and most congressional districts. That's tremendous impact. You know, to have a grassroots operation such as that, there are many companies, industries that will pay for that. And you have it naturally and a good story to tell. So keep telling it and tell it across the aisle.
And how important it is, you know, for our legislators to know we're out here. And I think Urla's story about Congresswoman Waters calling around and saying, hey, you know, not just, hey, there, you know, we're trying to get some financing and investment capital available, but hey, we need you guys. We need you to, you know, I need to know how you're helping us serve the community. And I think the fact that, you know, on both sides. So sometimes even if we're the smallest of institutions, we have annual business meetings of our membership, and back in, you know, in the future when we're back in person with those kinds of events, those are great opportunities to engage legislators regardless of party or partisan, you know, politics, and let them know this is an important institution in their community. So thank you, Alane. You know, I thank you for your thoughts and your comments today. Thank you for fighting the fight alongside us and with us on behalf of small credit unions, on behalf of MDI credit unions, on behalf of CDFI credit unions, and really all credit unions that are trying to make a difference. So we really appreciate, I appreciate you, and I thank you because you've been a real great partner in the work over the last year. So thanks.
Well, thank you, Cathie. We have a broad community of support for Inclusiv and willing to really, you know, just dig in, do the shoe leather lobbying that's needed to be done. And, you know, I can't say enough about Inclusiv and its relationships with the state leagues, with CUNA, with having a voice in so many of these stakeholder coalitions is tremendous. You can tell the respect, you can see the respect that is given to Inclusiv. So just keep it up. Inclusiv members, your voice is being heard, you have a story to tell, and now is the time to tell it. Thank you, Cathie.
Thank you. And with that, I will turn it back over to Pablo Di Filippi, who's going to take us through the final steps of the conference.
Thank you so much, Cathie and Alane, Urla, Paul, and Bill, and of course, Senator Warner. This has been an incredible session, right? I can't think of a better way of to wrap up these 2 days of knowledge and networking on all things financial inclusion, community development, and racial equity. So thank you so much. It's been inspiring. It's been something that hopefully will keep us going, right? So as we go back to our daily work, please let's remember these learnings. Let's share also these learnings. So I have now, I need to introduce now one of our board members, Eddie Alicea. He is the executive president of Cooperativa La Sagrada Familia in Puerto Rico. Eddie is also the board chair of a local association from the island that has been an incredible partner of Inclusiv as we have been working around community development and CDFI. Eddie's cooperativa actually has the distinction to be the first one in Puerto Rico to obtain the CDFI certification. With that, I'll introduce to you Eddie Alicea.
Thank you so much, Pablo. Thank you very much for this work. We're looking to say thanks to every Inclusiv member of this network for their help to our credit union in Puerto Rico. On behalf of more than 110 financial cooperatives in Puerto Rico, I would like to invite you all to join us on May 2 and 4 next year for Inclusiv annual conference in San Juan. It will be a great conference. Just 2 days ago, on September 21, we remember the 4th-year anniversary of Hurricane Maria and its devastation. We will never forget how the credit union movement in the continental United States come to our aid. That help went beyond disaster relief and become a permanent effort to help us become more resilient. Thank you to Inclusiv Help, we have transformed into a CDFI powerhouse. Now there are more than 50 CDFI certified cooperativas, and we have collectively received more than 65 million in CDFI, TA, FA, RRP, and just today, a small dollar loan program funding. We are very grateful to all of you, and we look forward to show you our traditional hospitality. Join us to learn more about our century-old financial cooperative system and its special bond with communities and in the island. Get to know our people, our beaches, rivers, mountains, gastronomy, and culture. Puerto Rico is a world unto itself, a mixture of cultures and systems. With a strong cooperative tradition and vision, the perfect place for a conference about financial inclusion, community development, and resiliency. I look forward to meeting all of you personally. Thank you, Inclusiv Network, for your help to our system. We are waiting for next year to have all of you with us to say thanks personally. Thank you, Pablo.
Thank you, Eddie. Really appreciate it. You heard it. May 2nd to the 4th next year in beautiful San Juan, Puerto Rico. So please mark your calendars. It will be a celebration of the getting back to normal and a terrific opportunity to learn, share, and network with legislators, practitioners, experts, and leaders like you all who make our community development credit union movement. Thank you again for taking the time to join us during these 2 days of learning. You will receive a quick conference survey tomorrow. So please complete it. Please do not complain about the food. That is not our fault. I invite you to share what you heard yesterday and today. It's valuable information that will be of interest to your colleagues, peers, and board members. All the videos shared in this conference are already up on Inclusiv YouTube channel, Inclusiv CU Network. Recordings of general breakout and networking sessions will be up by October 11th in both Spanish and English. Cathie, please come back again. Oh, I see you there. So let's say goodbye, but also invite you all to see you in Puerto Rico. Nos vemos el próximo año. See
Nos
you in
vemos
San
en
Juan.
Puerto Rico. Muchas gracias. Thank you all.
Bye.
Thank you. Great job.
Bye.
Bye.